Hello everybody. Today I'd like to talk to you about the current state of the economy in America, because just now we had interesting news that were released on the stock market that said that Federal Reserve is not going to raise the rates, so which means it's a good indicator that the economy is in great shape, and we should expect to have record economic numbers coming from American businesses. So unemployment is very low, consumer confidence is very high, investor confidence is very high right now. And recently we just had an interesting psychological test for the stock market when the news about coronavirus broke out of China, and everybody was kind of spooked and concerned because besides of panic in China and some concern in surrounding countries, somehow the stock market in America actually didn't take it that bad, because it was continued to grow, and just in a couple of days, like 2 days ago, it took a beating of it went down around 450 points. I'm talking about Dow Jones. However, the next day it actually bounced back a little bit, and the next day after that it bounced back 180 points. Today the stock market is up another 100 points, and this is January 29th, 2020. So considering that we went through this investment test very well, and investors were not that much scared in terms of dumping their stocks and trying to move to cash or buy gold, this is a very good indicator that we should expect more growth in stock prices this year of 2020, which basically tells me that if you have cash to invest, I would say that you should probably consider buying US equities right now, especially in the last 2 or 3 days, because of the sell-off of because of the coronavirus. It created, I guess, some opportunities for stocks, especially consumer stocks, to buy them cheaper than they would have than you would have bought, let's say, a week ago. If you want specific advice, I would say that companies such as Starbucks, that has a lot of coffee shops in China where people stop going because they don't want to spread the virus, and also this company such as McDonald's, the same exact thing. People are afraid to go into crowded places, especially where they serve food, and bacteria could actually, if it's there, could multiply. There's other places where people stop going that much, and I would say that these companies currently you could buy at pretty good discount. Also, if you're not aware, but there's around 250 companies from China that are being traded in the United States, and I'm talking about Alibaba, China Insurance Company, J2Com, and there's a bunch of those companies that because of the chaos and panic that just happened in China, they went through a major sell-off, and even though they're great companies that generate a lot of revenue and profit, and just basically a week or 2 weeks ago were considered great companies, especially Chinese airlines. I think it's China Eastern Airline. They are right now being traded at a great discount. So if you would like to invest maybe in the Chinese stocks or consumer stocks, but just in one shot, I would recommend you to get an app which is available via the website for ETF.com that covers 2,200 ETFs being traded on the US stock market. And you could easily buy like say Chinese centered ETFs or consumer product centered ETFs with one shot that would invest actually in a basket of companies from this sector or this specific country. So the app runs on iPhone, iPad, and Apple TV. It covers 2,200 ETFs that are broken in individual groups based on sector of economy, based on the country where this ETF is investing in, or based on the price of the shares, such as you could buy ETFs that are traded under $5 a share, that are traded between $15 and $25 a share, and so on. So I would highly recommend you to start considering investing in the stock market right now while we still have this discount because of the coronavirus, and the US Federal Reserve is not raising the interest rates. So thank you for your time and good luck trading.